Thanks for tuning in to this episode of the Blockchain Monthly Update with Dan Weiskopf. We're reviewing what's gone on in the blockchain space for the months of September and October 2022. Dan, a lot's been going on. There's a perfect storm in Bitcoin. In your most recent report, which viewers and listeners can download by going to bloketf.com, you talked about the four drivers of this perfect storm. I'm going to lay them out and let you comment on them. Number one, we've seen the cost of capital double. We've seen energy prices increase, potentially have doubled. We've seen Bitcoin prices implode by 50%. And then implode is my word, not yours. And then we want to talk about the difficulty rate, what it means, and the implications for that. So Dan, what are your thoughts on this perfect storm in the blockchain space?
Yeah, so to put everything into context, I have to admit that I am an optimist in general. And when I look at the perfect storm, I'm looking at, a business that, has seen all its costs go up 50 to 100%, right? Just broadly speaking, and its revenues get slashed. So that's really a challenge for any business. But here's the thing, and people don't always appreciate this. You have to have the miners if you want Bitcoin to succeed. That Bitcoin cannot exist without the miners. So the fact of the matter is, I think that let's take the first issue, the difficulty rate, because that's something people don't necessarily understand. So what that is more miners, meaning the equipment, come online, there's more competition to get the yield of the Bitcoin reward. Okay, so when capital was cheap, it was easy to build the facilities, right? So what we're seeing is more miners come online, therefore yields have come down, and we're now obviously, like every business, we're seeing cost of capital having doubled, right? Mm-hmm. So there's an inverse relationship to that. Now, actually, as a positive with this perfect storm, what I'm thinking is happening, and this is confirmed by my channel checks, right? Is that with capital increasing the way it has and the profitability of these businesses going down, guess what? The rate of the difficulty is going to level off, right? That's what we're thinking is going to happen, which means that the bigger miners that were long will actually start yielding more profitability as a result of that. Now, then there are two other issues, right? To your point, energy price. Now, energy price is a problem for the miners because it's actually gone up so much. Now, I think that's also potentially leveled off. It may not be fully leveling off until maybe the second quarter, right? Because we got to get through winter. We realize that. But when that also subsides, you're going to have a couple of things going in favor of the miners. But we got to get through this period of time. Long-winded answer. I hope I was clear.
Yeah. And so one of the byproducts of this, as you noted in your report, is that equipment prices have come down. But what are the implications for that in the short term and the long term?
Yeah. So taking a step back, why did equipment prices go down so substantially? Well, because people can't afford the equipment right now. So there's a huge inventory glut of equipment. So the implications are those companies that can afford to buy the equipment will do so over a slower period of time. And in doing that, they will end up being well positioned in the future. But the question is, can they raise the capital? Because it's really, really hard. Stating what may be obvious, but there's huge shorts in this space at this point, right? And they're making a bet that these companies are not going to survive, right? The good news on all that is they're potential buyers because they might have to cover if things get better, right?
Yep.
We'll see.
Yep. All right. I want to read a line from your most recent report. And as a reminder, you can download this at bloketf.com. All right. People need to think beyond current broad economic conditions to see the direct benefits. And in doing so, they can imagine the benefits that might come in the form of supply chain disruption, better database management, where individuals can own their data and healthcare companies can process information with insurance companies in an efficient manner. Dan, help us go a little bit deeper on that. How does that help investors that are allocating capital today?
Yeah. So when you look at companies like MasterCard and Visa, they're investing heavily in the blockchain. And they're investing heavily in the blockchain because they recognize that individuals want to own their own data and they want to be a part of that, right? And so what we're seeing is a lot of companies, and by the way, you're probably going to ask me about companies like IBM and Accenture as well, right? IBM and Accenture are two examples of companies that are working with Walmart as an example, right? So we often talk about, the categories and we talk about high level on things, but IBM and Accenture are companies that facilitate the building of the blockchain, right? For a company like Walmart, who sees the value of the blockchain in their business. How do they keep track of the truckers? How do they keep track of their account payables? They're in the metaverse. Well, how do they do that? Well, they need companies like IBM and Accenture.
Okay. Let's pivot to the ETF where you are the co-portfolio manager, symbol BLOK. Historically, you guys have had 7 categories for the fund: transactions, mining, conglomerate, exposure, private blockchain, venture, and public blockchain. You guys subdivided one of those categories and added a new one. What do viewers need to know?
We're trying to educate people as well as manage the portfolio along those lines, right? So when you're talking about the transactional side, you're talking about businesses like Coinbase and Robinhood and those companies are benefiting by the transactional side of the business, right? So that's pretty clear. But then you also have companies like Roadblocks that are pivotal in the context of helping to build out the infrastructure and the applications that are necessary for the evolution of the blockchain. And we took the stance, being early adopters, right, that we needed further clarification on exactly what this huge category was in our portfolio, which at the time, as the platform, as it was described before, was like 36-37%. So we broke it down to like 13% in the way of applications, and roughly 23% in the way of the transactional side of business.
All right, Dan, let's wrap up with rapid fire. We want to get all these answers in 60 seconds or less. I'm going to throw out a company name, and in one sentence, tell us why it's part of the space. Are you ready?
Trying. Go for
PayPal.
it. PayPal, total transactional type of business, but they're embracing applications as well.
MicroStrategy.
Bitcoin has to go higher, and they're making a big bet with 130,000 Bitcoin and continuing to buy.
MasterCard.
All about the business of owning the data and controlling that data on the blockchain.
Finally, Roblox.
Infrastructure play. You need that company in the metaverse.
Excellent. Viewers, please download and subscribe to the monthly blockchain update by visiting bloketf.com. That is bloketf.com. Dan, thanks for coming on again.
Thanks, Jay.